Hi, Trader Tina here once again from ShortMeTina.com with my daily recap. Today is Monday, so I want to say happy Monday. All things considering, happy Monday. I generally hope that you had a very enjoyable, relaxing, and safe weekend. And so before we jump into a recap of the overall markets, you know what I want to do? The first thing I want to do is I want to thank you for being here, right? I know you could be doing a gazillion things right now in this moment whenever you're listening to this. I know you can be doing other things, but you choose to, at this point, listen to this video, and for that I am truly grateful. That's the first thing I want to get out the way. The second thing I want to get out the way is I want to thank publicly all essential workers. I'm not quite sure if I've done that yet since this COVID thing started, and I'm not even quite sure what day we're on. I want to say maybe day 14, might be. If my count is incorrect, feel free to correct me in the comment section. But since this entire thing started, I'm not quite sure if I've publicly thanked essential workers. If I have not, or if we did not, I want to use this moment right now to thank you for your service, for all that you do. It is genuinely 100% appreciated. So I'm not quite sure, again, with these videos, because of what's going on, they might not be as structured maybe as some of the other videos that I've done in the past. So I'm not quite sure exactly how many stocks I'm going to analyze right now. I only have the SPY on my notepad. Yes, I do still take notes with a notepad and a pen. Granted, I have a phone, but I like to write things down. So right now I'm looking at my notepad and I only have well, I have the IWM here, but I've decided I'm not going to go over the IWM. So right now I have the SPY. I'm not sure what else I'm going to go over. Trying to make this really quick. Anyway, so I've done extensive videos in terms of the SPY expectations, levels, hence this red one here. I'm not going to go back, but if you look at previous videos that I've done before, you'll know that this red line essentially signifies a level that we try to test resistance for about 3 years, from I want to say 2014 to around 2016, and then we finally broke out of that level. Didn't quite back test it here. We got close on March 23rd. One as low as 218, but that level for me, give it a range, it's around 200 to 210. So this red line here says for me that, you know, maybe at one point we actually are going to revisit that. Right now, it's not looking like that's the case. The market has really rallied since, let's put it in quotes, since bottoming out back in March 23rd of 2020. And that's sort of like the question on a lot of investors' mind and traders, including myself. Was that it? Has the market, and I don't think it has the market priced in everything that's going on out there? I'm talking about the initial 3.2 million unemployment claims last week. I'm talking about the numbers that potentially might, you know, and I feel like those numbers, that was just kind of like a drop in the bucket. I think things, just the way, you know, this virus is playing out, I really think that there's going to be more unemployment claims going forward that might actually trump the number, no pun intended, trump the number that we saw last week. So I'm not quite sure the market has priced that in. Maybe the market has priced that in. I'm not sure, but I just don't think that they have. So again, a question that's on a lot of traders' mind was, or investors, was that low last week? I believe on Monday when the market dipped to 218.26, signifying a loss of about over 30% from its recent highs back in February. Was that the bottom? Is that it? Will this be a V-shaped recovery? And when folks talk about V-shape, they're essentially talking about that. Like, it looks like the letter V, where you decline, no sideways action, and you just bounce right back up. So right now, based on this, it's looking like it might potentially be a V, which is in kind of stark contrast to what I was talking about last week, where I'm expecting the market to fall more. And I have not abandoned that thesis as of yet. For me, the market always has to prove itself to me. And although it's up 3% today, coming off of a record, I want to say what? 15% upside last week. And you can see here, out of the last 5 or so trading days, we've been positive essentially on most of them. So I say all that to say, I do not think that we're going to have a V-shaped recovery, although that might actually be in the cards. Um, I'm still paying attention to that 200 to 210 level. Granted, we got close last week. We got to 218, but I still would like the market to touch that, or at minimum, retest that March 23rd lows. That would give me more confidence to buy. But if we're looking at things from a very shorter time frame, meaning when the market actually collapsed, right? Actually collapsed, what I'm paying attention to on a very shorter time frame, right? Shorter meaning like the last 3 days. It looks like we're sort of establishing a range here, right? We're trading within a tight restricted range. So the bottom of that range, which can really serve as a reference point or a point of support, we can call that around, let's say, 245 to 250. So I'm going to do what I call like the over under. So if we remain above that line, then yeah, slowly, if we can remain above that line for more weeks or more days, I'll be inclined to buy that and be bullish, right? Because then if we've tested that level, again, right now it's only 3 days, but let's shoot out to the future, which we tend to do as traders or technical traders or investors. We're always looking towards the future, and we look to the past as well. But if we let's say we're going out to the future, and for the next few trading days or weeks, that 245 to 250 level serves as a floor, then I would say with confidence, then, well, you know what? The market has put in a bottom because it's been tested a few times and it has maintained that. So I'm paying attention to that level, over, under. So above there, bullish. If we dip under that level, then that thesis or that scenario and as a trader, you have to play out a gazillion, you have to hold so many thoughts all at one time. It's insane. And so if we dip under that 245 to 250 level, then my prior thesis or the other thesis that I'm holding consistently at the same time, parallel to this one, will come back into play, and that is we have not hit that bottom. At minimum, we're going to retest that March 23rd low of 218, or we're going to dip further about an extra 3 to 5% and retest what was once resistance back in 2014 to 2016, that 200 to 210 level. I say all that to say, I'm not doing much right now. I'm just looking. I'm waiting. I'm sitting on my hands. It's not always easy to do because you just want to jump in there. You want to jump into the markets, but I think right now it's very dangerous to just jump all in. I think you want to have some clear signals before you make a play either which way. And I have several scenarios, but none that's giving me extremely clear signals where I'm confident yet. So what I'm paying attention to right now for the past 3 days, we've seemed to have put in a floor that has been tested a few times. Let's call that 245 250 level. And I'm being repetitive, but I just want to drive that point home. The point being that that's the level that I'm looking at, and the other point being that I'm not trying to I'm not trying to jump ahead and throw on a short just for the sake of shorting. I'm not going to jump ahead and place along because I fear that the market is going to rally without me. Absolutely not. The market's always going to be here. I mean, we just shed 30%. The markets were not locked down. So the markets are going to be here for me and you no matter what. Right now, as I've stated before, preservation of capital really is key, emotional and otherwise. And you just want to ensure that you're making I won't say safe, but you're making a sound play before jumping in. So I'm not going to repeat because it's already long, but I've listed the numerous levels that I'm paying attention to, which is a lot. But as a trader, sometimes you got to do that, right? You have to hold all of these thoughts consistently in parallel all at the same time, and that's what I'm doing. And I'll continue to update you as things become a lot clearer to me. All right, so what else do we have? Oh, wow, I just checked the time on that video, and it was like over 9 minutes. Insane. So I'm going to try to speed it up with the rest. So Zynga, obviously, believe it or not, through all that carnage with the market declining about 30% last week, I did not let go of my Zynga trade. Why? I do want, even my JD trade, my motto is, if a stock is showing you a profit, why be so quick to let it go? Just let it ride. And so I've done that with Zynga. And I want to talk about it because for me, it's actually held up relatively well in this market, right? Look, today we closed at 686. The high of the day clocked in at 694. We got very shy of that $7 level. And what did 52-week highs clock in at? 52-week highs clocked in at 742. So it seems like Zynga definitely wants to retest that 742 high. And I do believe we shall hit $8 relatively soon, especially if the market starts to trend up. Like if we start seeing like a pattern, 3%, week over week with the market, this is definitely going to charge. It's being held up. I like it. I liked it before this. I like it even more so after COVID or during this COVID pandemic because a lot of these stocks, like the Zoom or the Netflix, where people are, they're locked down, not even just statewide, like worldwide, right? They're in their homes. There are these mandatory shelter in place orders or these curfews, lockdowns, whatever you want to call it. And folks have to find time or ways to entertain themselves, right? We have our phones. People are they're gaming, and you'll see that stocks like Take Two Interactive, Electronic Arts, like these stocks are up in this crisis, and it makes sense why they are. And so I like Zynga. And but let me segue really quickly. Uh, why I just love channels so much. I talk about channels, trading range bound, just exploiting that range. If you're not sure what I'm referring to, definitely right now go to shortmetina.com. I explain how to trade these in our free trading course. I like them because they're so, I won't say they're predictable, but they're reliable. And so look what happened here, right? The lower end of that range of the range of Zynga clocks in around $5.50. So in the carnage, when the market collapsed, look where look where Zynga kind of like bottomed out at, right? 565. Got very, very close to that range, the bottom end of that range, and then it bounced. Hence why I like to trade these, right? You can see it held here, it held all throughout here, it held here, close, no cigar, and it held here. So clearly 550 for the most part is a low. Even with the craziness that happened, investors said we're not going to have this dip below 550. Right now it seems as though we're charging back. We're back above that breakout area. We're above the we're above the resistance, right? We're above the top end of that range. We're going to call that support 650. Again, closed at 686, and it looks like we want to retake the most recent 52-week highs of 742. I think that's going to happen, and $8, that target I've been talking about for a very long time, it's still in play to me. So just want to talk about Zynga. Put it on your radar. Put it on your watch list. What else? All right, so let's wrap it up and round it out with ticker GRPN Groupon. It's a daily chart. We're off, believe it or not, 25% on a day. So it definitely got hammered today, which is going to be a bit odd that I'm bringing the stock up actually as a stock that can potentially appreciate by 100%. But closed at 96 cents. I don't know what's going on in after hours. This was disclaimer. I like to throw my disclaimers out there. A stock we actually took in the premium member community. And last week, believe it or not, last week we were up a whopping 100% on this trade in like a few short trading days. I don't even think we had to trade on for a good 2 weeks before getting about 100% return, all in like a few trading days. So despite us being down 25% on the day, despite the stock most recently trading at all-time lows, definitely going against conventional wisdom and a lot of things that I've said in the past. But Groupon, I definitely see this stock sitting here at 96 cents, a little shy of $1. I definitely can see this really, and look, resistance right here comes in at around 2. The 200-day comes in at around 233. So in the shorter term, I see Groupon going to $2. Still believe that despite this carnage of it being off by 25%. And you know what? Even if it goes lower, for me, the lower it gets, the better from a risk-reward perspective the stock looks. Because I definitely see this as a stock getting to around, I want to say $3 in the intermediate and longer term and possibly beyond that. But in the shorter term, I don't think that $2 is hard for the stock to actually get. And sitting here shy of $1, that's about a 100% increase. So I say all that to say to put Groupon on your watch list, put it on your radar. And if I did not throw that disclaimer in there, I want to be transparent, I want to be honest. We did take this trade in the premium member community. All right, so like I said, we're going to cap it there. Tina here once again from ShortMeTina.com. If you enjoyed any portion of that video, I want you to do 3 things for me. You ready? If you've listened to me before, you know exactly what I'm going to say. So you can possibly say it along with me or repeat. If you are new, this is going to be new for you. So are you ready? I'm going to go right now. 1, do me a solid. Like this video and comment in the comment section. Let me know your thoughts, right? And I should note here that engagement has been up. So for those, I want to shout out everyone. And I wish I had your names. Maybe I'll do a roll call at some point this week. I want to shout out to everyone that has been commenting in the comment section. It makes this all worthwhile that there's actually people out there listening, right? I like to engage. So first thing, like, comment in the comment section. What do you think about the SPY? Do you think that we've put in a bottom? Is this going to be a V-shaped rally? Will we retest the lows? Are we going to go a leg lower? Let me know your thoughts. Are you in Zynga? Oh, I didn't even do a disclaimer about Zynga. Well, I didn't say disclaimer, but I told you guys that I'm in the trade. So that is my disclaimer. What about Zynga, Groupon? Are you with me with these trades? Yes or no? Comment in the comment section first thing. The second thing is make sure that you're subscribed. We are on our way to 2,000 organic. I do not buy followers. You know, you'll see a lot of these channels out there. They have 10, 15,000 followers, all bought. I have no time. I'd rather do other things with my money, right? I'm not buying followers. So we're on our way to 2,000 organic followers. If you're listening to this message and you have not, on average, I want to say for the last week or so, I get about 200 to 300 views. So if every one of the ones that are listening, if every one of you just hit that subscribe button, I'd be at 2,000 by the end of the week. So on our way to 2,000. If you're not subscribed, do us a solid. Hit that subscribe button. I do videos every day. If you're subscribed, you'll be notified. That's the second thing. And this is the last thing. Third, right now what we're doing on our website is we are hosting a free 14-day trading course, essentially detailing for you a lot of the things that I've learned trading the stock market for the past 20 years. I am not asking for your credit card. No credit card required. All I'm asking is for an email address so we can know where to send that information to. So if you're not achieving the level of success that you want in the market, then maybe if you're a non-essential worker, you're quarantined, you're at home, you're looking to pass the time, maybe it's something that you should sign up for. So anyway, again, free 14-day trading course where I detail a lot of the things that has helped me go from inconsistent to consistent trading the stock market for the last 20 years. So if that's something that you're interested in, definitely head on over to our website, ShortMeTina.com. Sign up, become a member. Thank you for listening, and as always, thank you for the support. I'll talk to you tomorrow.